Morning everybody. Back from holidays, a little bit rough maybe, but we'll see how we go today. I've had a few calls from people dead keen to get my videos back up again, so I'm starting today Monday. Try to make it regular Thursday. Sometimes it doesn't work. This week won't work, so I just want to come out to you today on a Monday to get the ball rolling. Okay, I'm down at Bowen Heads trying to extract the last of the summer and also trying to let that gold medal feeling wash all over me from my good friend Jakara Anderson, who lives just around the corner. I can safely say that because Bowen Heads is a very small place, so wash all that gold medal feeling. Okay, this year I want to focus on the power of patience. Okay, it's very, very important to be patient in this market during difficult periods, during good periods, and let things happen. So I want to start you on the right foot and take a step back and check on the big issue, check on the big picture for you, not just focus on specific stocks, but actually focus on what we're trying to achieve in the longer term, okay? So my YouTube videos this year will be delivered in a short, punchy way, a lively way, my marketers tell me, and of course with analysis and tips to help you that matter to you. Okay, so short, simple, sharp, concise it is while delivering to you as much value as I can, so you can understand what we do and why we do it, and then you might consider joining us and taking your trading one step further into a disciplined, controlled, safe environment, with Stockradar as your partner. So we're here to help you as much as we can, guide you, educate you, all that sort of side of it. Building that equity nest egg should be considered at least a 5-year journey to assess and understand fully how an equity strategy works, as it will endure both up and down periods as the stock market does. It is important to know to handle all these phases and what to deal with them. So over time, your journey should be enjoyable and a profitable experience, okay? The power of patience means that you let the market do the work for you while you sit back and pull some levers only when necessary, okay? You let the market do its thing for the most part. Big tip, you cannot make it happen, let it happen. Save your money, be patient today, the opportunities will come as they always do. Hi, my name is Richard Lee and I manage the stockradar.com.au website. We identify stock picks using our high probability, high conviction strategy. Basic membership where you choose your own stocks, or portfolio membership where we guide you. It's your choice, but this year I want to focus on the benefits, power and performance of Stockradar's high conviction 5-stock portfolio, which has been considered performing very well. Stockradar's high conviction strategy, what does that mean? It means we believe in what we do. Okay, so far this year we've seen the Nasdaq slipping, stocks are wobbling, stocks have been getting hit, and we've seen our stock pick count shrink markedly over recent weeks and months. So what do? As risk heightens, we go into capital preservation mode, as always, as the road ahead becomes a little messy and untrendy, if that's a word. The odds have clearly shifted from that steady trend behaviour over the last 2 years. That's not to say the market won't go back up again. We've just identified a higher risk stage, and thus the smart thing to do is to reduce your risk. It puts us in a cashed up position ready to pounce. No doubt we've hit a danger stage, so while that message is clear, let's be careful, okay? So not only is the power of patience, but also I want you to try and focus on no distractions. Try not to get distracted from what you do, from listening to other people who are experts, who promise the sky, all this sort of stuff. Try and keep that focus. Okay, so what I'm first going to do is I'm going to go through the format of the day as I usually do, and we'll get into some markets. Okay, so this year, it's a new dawn, a new trading year. The power of patience is what you're really going to focus on, okay? So focus on what you do and do it well, okay? So let's all start on the right foot, okay? All right, so the format today, as usual, is we go through the overseas markets, just get a feel for the background of what's going on. We look at the ASX 200, how it's performing, Stockradar portfolio, where it's going, ASX stocks, and also trading tactics, which I'll be talking about the power of patience again today. Now, I've got one little chart here that you can see the ASX corrections over the last, well, this is going back to about 2007, 2008, when we had the big crash, but you can see here, there are 1, 2, 3, 4, 5 5, we're going to the 5th one now. There's 4 fairly significant corrections over that period of time. And you notice after each correction, we have a big upswing. Correction, big upswing. Correction, big upswing. Correction, enormous upswing. So it's times like this, and we don't know how far it's going to fall, if it's going to fall any further or if it's going to go straight back up, but you need to be steel your metal in all situations. To panic and drop out of things now is not the right thing to do, because you will miss out on the upswing. And I did have that conversation with many people after COVID. The fear was that there was going to be another big leg down, and sure enough, the market just rocketed higher. Now, I can't explain it. I don't know why things happen. All I do is follow the price action, and that led us to get into a lot of very good positions over that time. Some of them which we're still running at the moment. So, as I say, try not to let the world distract you. Try and focus on what you do and listen to what you do. Okay, so we're going to get straight into the markets now. And first off, what I want to go into is the Dow Jones. And we can see that fairly clearly that it's had a bit of a correction, good support down here. I'm watching this pretty closely. It's performed a bit better than the Dow, but we can see the common story is here we have some heavy selling. It's hit this market on selling challenges, but we've also seen the buyers bite, and we've seen the same pattern over and over again over the last couple of years. Admittedly, this drop is probably larger than most, but we'll have to let that play out. The momentum has certainly gone out of a lot of these at the moment. Okay, so now we want to have a look at the NASDAQ. The NASDAQ is the other one. Again, perhaps looking a little bit worse. We've got a little bit of diversity there. I'm going to have a look at a couple of those big FANG stocks later on for you. This looks a little bit worse, although we have got some big buying pushing it up here. Hasn't pushed it up all that far compared to what we've seen on the downside. So the jury's still out. Momentum's gone right out of this now. So it really is, so I don't know whether the market's going to go up or down. All I know is the risk has increased at the moment. So being a long-term trader, being a long-only trader, I want to know when the market's going to go down because I need to protect myself. Okay, so that's the NASDAQ and how that looks. Okay, go through the commodities. We're going to have a look at this Marlin Spring crude, which has just been rising for a long time. And I'm going to go back a little bit further, have a look at this. So this is we've now broken this high back from 2018, which is a significant break. And we've got a very powerful move here, and you can see all this huge volume going on through here, pushing it through this level here, and momentum's reviving. So we can all make calls of $100, whatever it's going to be, but all I know is this market looks like it wants to go higher. It's broken a significant resistance level, so I'm fairly confident. We don't have a lot of stocks at the moment, but we have eased into a couple so far, Origin being one, which we're quite well up on. The other ones are starting to come on board. We're starting to hit levels like Santos, Woodside, are all starting to hit levels that are looking pretty interesting. So keep an eye on that Brent crude market. Okay, now we can go down to have a look at, let's call this disorganised copper. Copper, again, we're in this situation which we've been in for the last 12 months really. It's just going sideways after a big rally. Inevitably, this is probably corrective, but we don't really know, excuse me, until it breaks to the upside. But that would be my call at this stage, as it hasn't come down much. So I'm just going to wait and watch this one. Momentum's gone right out of it, and it's going sideways. Okay, the other one I want to have a look at is gold. Where is gold? Just have to find that one. It's always hiding away from me in here somewhere. There we go. Gold, similar picture. The signs are neutral here. Is there a little bit of hope across the bottom here? Possibly. There's not a lot of volume. Momentum's pretty flat. So, I can't get too enthused about gold. There's inflationary stuff happening, but gold's not responding. So really, considering the volatility of our gold stocks, that's certainly a no-no for me. Okay, so let's go to the ASX 200. Now, it's been pretty interesting of late. As you see, I'm going to blow this one up as I usually do. Okay, so we've seen this beautiful rally now, according to TAR. Since August last year, we've seen this market hit a high here. It broke through the highs here, very, very bullish, went ahead well. Then all of a sudden, some selling hit it, and we had a fairly big down period, probably the biggest down period we've seen in this whole trend up until now. Then we've rallied, and we haven't made a new high, and you know how I hate the fact that when we don't make a new high. It worries me enormously. And then we make a new low below that low. That really is a trend reversal pattern for me. Okay, so I don't trade the ASX 200, but that's the shape of it. It's made up of mainly leaders, and the leaders, I think at the moment I only hold 3 out of the top 10 leaders, whereas holding a lot more before. So, the banks have come off, the miners have come off, Telstra's looking okay, a couple of the banks looking okay, but generally that leading pack has now come off, and that's why you're seeing a lot of pressure on the ASX 200. And it certainly looks like it's a downward move to me. The evidence is suggesting more downward stuff. We've had a big pickup last week, but that's not really enough to put a dent in this downward move. This work here over the last month is more important than any 1 week. So that's a concern of mine that we've broken below there. We'll see what happens. We've seen a big shrinking of all the stock picks. If I just go through the stock portfolio, was actually up 1 this week. I think it was an ore stock, to 30 stocks only. So 30 positions only. So I've got 23 stocks of 186 stocks covered, and I have 7 ETFs of 21 covered. So that makes 30. So all in all, 23 stock picks of 168 stocks is not a lot of stocks. So that has shrunk enormously. The 5 stock portfolio is down to 4 out of 5. The 10 stock is down to 7 out of 10. So they're starting to whittle away a little bit. The only sector of any note has been property, which is really just sitting up there because everything else is so weak. So there's not really much to say there. The 5 stock portfolio, which I began in March, has done pretty well, believe it or not. It's at 10.3% up, but it only holds 2 stocks now, which is CPU and IPL. The rest are out. And normally the 5 stock portfolio will be full. But to have them down to 4 is not so bad with the main one, but down to 2 on this one that I've been building since March is quite a concern. So that's a bit of a worry there. So these portfolios are religiously implemented compounding portfolios with dividends reinvested, including cash returns but not cost. That's how I generate the returns. They are low activity portfolios because I have very few stocks. I use weekly data, and they're small portfolios such as our 5 stock portfolio. So the activity costs are not a huge thing in this thing. So the last month's issue of the Radar newsletter, I did discuss in the Radar's rant the absolute importance of sticking to a plan and running it for a period of time, and a good 5-year period of time is a good time to allow validity and allow any disappointing start dates impacting the performance and the weakness in a 1 or 2 year view. That expectation is not a good expectation to have for a portfolio service or for a weekly trading time frame. 5 years or longer is a better time frame to assess the performance of a strategy, and it appears the 5 stock is the best performer for us. That's the high conviction terminology. Okay, so let's go get into some stocks now. Okay, we'll just clear this up. Okay, the first one I want to go into is our fearless leader, BHP. I'm taking a bit of a long-term scan at some of these stocks at the moment, okay? So I just want to give you an overall picture here. So if we look at BHP now, this is what it's looked like for the last, so this goes back to 2008 when we reached the peak. We've got the cycle high here, cycle low down here. We just blew out the cycle low down to $14 back in 2016, but it was a very good buying level. We've just blown out the top of this trading range this time, but it's come back inside it. So we're no further along the line of knowing what's going to happen. However, what we do have here is, if I just look at the note here, the jury is out. This is a big miner, one of the biggest in the world, has huge assets, although they've fined down a bit and they've controlled them a little bit. The commodities, oil is very strong, although it's chopping out a little bit. It's under reunification plans, which is probably a good thing for us, and there's also now a dividend payer. So there are things there that are quite positive about BHP. And when I look at this trend, now this is a fairly longish term sort of trend we're looking at here, but from the lows in 2016, we've had a rally through here, cycle high to cycle low. We've come back in. This is the big crunch down. It's rallied up. It's in mid-range to me. It's not giving me anything, so I'm very neutral on BHP at the moment until I either get a new high or a trend reversal. So I'm not too sure what is happening there. The trend intensity rating is -4, so I'm staying neutral for the moment. We've had some good trades on this one of late, but for the moment, a little bit unsure. Okay, now the next one I want to go to is NAB. The banks, let me just find NAB, okay. So NAB has been a pretty good performer of late. Now, its trend intensity rating is +7, and you can see the cycle high here, the cycle low here, which it's now working up towards. Now, it's different to some of the other banks, but we'll just look at this one for a start. At the moment, if I just blow this up, trend intensity rating is 7, and we can see here it is holding up above this support level around here. I have a stop around here in this case at the moment, so I'm still long NAB from down here. It still looks pretty good to me. It's holding up. While it holds up, we maintain it, but it's sitting on the average here pretty well. There's been a bit of selling volume here, and momentum's declined a bit. So the picture is +7 on trend intensity, not an outright 10, so we're wary, but if the stop does go off here, we lock in our profit and get out. Okay, if we go and look at another bank, which might just be CBA, because this one was also a very good one. If I look at the long-term picture on this one, the cycle high, the cycle low down here, sorry, that line's a bit crooked, but it's down here at around $50, $55. Cycle high was up around 98. It blew that out of the water recently, and possibly we've got a little bit of an overshoot here. because it's now come back quite significantly. And if I blow this area up here, we can see the break point, we can see where we got out, and we can see now we've had a fall down, we've had a rallied up, and now we're going down again, and we can see some very heavy selling. Momentum's back to zero. So at this stage, CBA, we just stay neutral because we're out of this one, and we have no reason to end at this stage. We had a good profit, we locked it in, and we stand neutral. So we're getting slightly different pictures. We know Westpac looks pretty bad, CBA's turning, NAB and ANZ looking okay. So it's an interesting picture with the banks, but CBA for the moment, that's an outie for us. Okay, now the other one I want to look at, again, we're talking about these big stocks and how the top 10 have been toppling over and toppling our ASX 200 over. Well, this is another one, Woolworths. If we just go and look at this one here on a long-term basis, you can see the old high back here. It's rallied through there, but for the last few years, since 2020, it's been going around in circles and not really doing much at all. So there's been a lot of people are very wary of this one, and we've recently seen quite a big sell-off. There's a bit of volume down supporting it down, and we've got the lows down here of support, but it is wobble. These highs are lower, and now we're really pushing at support, and if this goes, we have another drop coming. At the moment, support is holding it just, but you can see here momentum is certainly favouring the downside at the moment. So Woolworths, these leaders are not really in happy spots at the moment for us. Okay, so as I said, of the top 10, we only hold NAB, ANZ, and Telstra at this stage. Okay, now I want to get a couple of other little stocks, some stalwarts, which have been very, very good to us. I did cover CPU in the newsletter this week, and it was just testing a bit of support down here, but it certainly reversed last week in no uncertain terms, and that's been a very, very interesting stock. Seems to be fighting off all the sentiment at the moment. We had a good trigger back here, back in March 2021, $15. It's now up around $20, and trend intensity rating is 8. So CPU against all odds is performing very well, as some stocks do. They just seem to go on and do their own thing. That's why it's incredibly important to do your own thing, follow your own plan, and that's the way it should unfold. Okay, so this has been an impressive bounce last week. A $2 rally is pretty significant for computer shares. So those buyers are back in no uncertain terms. Okay, now the next one I need to go to is National Storage. Now this is one that's been just an old boring old stock that's tootled along, and again we don't want to ignore these stocks because they can provide very good returns. And we've had a good trend reversal break up here above $2 back in December of 2020. So we've had a long trend of over a year here, which has now gone through the highs. It came back to the highs, tested it. Our stop loss was around here somewhere. We've bounced a little bit today. Last week. I'm not sure what we've done today, but the market it still looks pretty good. We've made new highs here. National Storage trend intensity rating is +7. Volume doesn't tell us a lot in this one. We have had a bit of selling on that downward swing. Momentum's come off a little bit, but not too concerned. Generally, the market is a positive. That's why we've got a +7. And I've also got my little trend line here, which I'm not big on trend lines, but the trend usually follows the average pretty closely. And so that's really the basic trend of National Storage at the moment. And it looks pretty good for now. Okay, so the other one I want to have a look at is S32. Again, another miner which has done pretty well. And the reason I want to talk to you about this one today is not only is its trend intensity rating 10, and we've had a great run on this since 230 back in November 2020, so some of the stocks are still holding nicely. It's had a run up. We saw a little bit of pressure here on this from this resistance, pushing it back down. It's had another go, it's come back, and it's having another go now. So what we do is we look for trend reversals, and when we identify the trend, we get the break, and then we follow it, and we lift our stop behind the trend, and that's how we do it, and that's how we've done it with S32, and we can see beautiful volume here, beautiful momentum. But what I really want to show you today is I want to blow this up a little bit and have a look at the longer term picture on this one. We can see a pretty clear picture here. This is the old high for South 32. Okay, now it's been released by BHP to do its own thing, and if we get a breakthrough here, that's going to be a very significant break for S32. So for those that are in it, hang on to it, unless your stop goes off, and at the moment it hasn't gone off, so we're hanging on to this, and it looks very good. And if we do get a break above this high up around $4, then that will be a very significant move for South 32. Okay, keep an eye on that one. The only other stock I want to go through today is Origin, which is our one of two energy stocks which we hold at the moment, and it's done pretty well since we started this one. You can see the big downtrend here. It's now moved off there, and we can see here I've highlighted down the bottom down here that we've seen a shifting equation. This whole move here, big downtrend, lower highs, lower highs, lower highs, but good support here. Support holding. Eventually, one of them's got to break. So what we've got here is we've got a slow move here. So we can see the volumes picking up on this right-hand side over here, especially in the lows here, and we start to get a break above here. So we break this sequence of lower highs here, which gives us our buy signal. We get good volume, and momentum crosses above zero. That's our alignment of the stars there. And then since then we've seen the move. It took a little bit of time to get on its move, but it's now moving pretty well, and it's now up about $1 since we started, which is pretty good since that was in October last year. Trend intensity rating is 10. Again, we see the selling testing this stock, but the buyers have come back and lifted the price. A good sign. Momentum is good. So Origin, after a very, very long period of downward trend, it's now starting to find some support from investors and doing pretty well. Okay, so the opportunities at the moment, still probably the energy sector. I know that Santos, Woodside haven't gone off yet. 7 Group Holdings looks like an interesting one to watch. We might look at those next week. And Beach Petroleum, which has probably come in this week from us. Now, I would also want to give you a bit of perspective from reality on some of these other stocks. Now, if we go firstly to, I'm going to find the first, okay, this stock, Google. Okay, we talked about NASDAQ and what's happening over there. There's been a very strong market for a long time, but we've seen some changes. Now, Google is probably one of the better looking ones. It had a big rally last week on a good profit report. Doesn't look too bad, good volume. But this is probably the most significant sort of correction we've seen for some sort of time. So now let's go down from Google. We then go to Amazon. And Amazon, again, we've seen this go sideways for probably a year or so now. It's fallen down below these sorts of level here, or just about has. It's rallied last week on a good profit report again, but still we're below all these levels here. So the chart doesn't look quite as good as it did a while ago, okay? So a little bit of a negative there for Amazon, but we'll wait and watch. You can see the momentum's gone right out of these stocks now. So the next one I'll have a look at is Apple. Okay, Apple, again, good profit report. Its trend looks okay. You know, it's still going high highs, high lows. Volume's been okay, momentum's okay. There's nothing untoward showing there. You know, a trend is your friend until you get signs of it not being the trend. And there's no real signs here for Apple. So Apple's probably one of the better performers in there. Google and Amazon, we're a little bit more careful, especially Amazon. Now, if we go to the other two which are in this group, one is Netflix. And Netflix itself has had a big downward move. All of a sudden, subscribers seem to have hit a wall there. So people are very concerned about growth. A huge amount of selling. Momentum's dropped right out of it. So this is really a stock that says, no, I'm out of this stock. I'll leave that to other people for the moment to decide what it's going to do. It may go up, it may go down. 50-50 toss of a coin for me at the moment. So Netflix is an outie. And then, of course, the last one we want to have a look at, which you've probably all seen on a chart, is Facebook. I can do no wrong. Facebook has actually done something wrong. And the things have been building for a couple of years, I would have thought. And some of the things we've accepted, which they really shouldn't be doing, especially with data and privacy and things like that. So it's hit a bit of a wall. Zuckerberg, I don't know how much people like him, but you know, there's things there that are changing there. This has been an attempt, a fall down, an attempt at a rally, failed, and then a big sell-off and selling here. So Meta platforms, or Facebook, whatever you want to call it, the whole FANG thing has certainly changed quite a bit. So we're careful, and again, that's just saying risk is back on the table a little bit more now. Okay, so I want to get into my trading tactics now with you quickly. I don't want to go on for too long today. This is my first one. So trading tactics, firstly, so what I want to do is here. Okay, market's correct. Okay, we're going through a possible correction. It's come off. How far down? We don't know. People are getting nervous, I know, because I get the phone calls. Let's just go through it. Why are we surprised, and what do we do? From the first chart that I showed you, we know they happen repetitively. And when they do happen, there's usually a big bounce. So that's what we're looking for. So firstly, I want to go through what I talked about at the end of last year. Did you give your brain a break over the holidays? Did you have a rest? It's important to be refreshed and revitalised. The year can wear us down over the year, and we get tired and exhausted and do wrong things. So I just hope that you're all refreshed. You know the old worn out shoe syndrome. We can feel a little like that sometimes. So Holidays and breaks refresh, revitalises, renew and our zest, and I'm extracting as much as I can out of this holiday. And not that I'm on holidays now, but I'm still down where I like to be, down by the beach. Maintaining the buzz is the hard part, but through discipline and hard work, the rewards will come. And when the rewards come, it helps to keep our zest going. And that's really important. So keep recharge, revitalise, renew, refresh. Do the right thing by yourself. Keep your follow your trade plan, and things will follow. Okay, now to the real bit. Okay, markets are correct. Why? Markets correct. Why are we surprised? We shouldn't be. They do that. So why do we panic? Why do we get concerned? They are the norm. The 5-stock portfolio is actually down over the last 4 months. Every month it has been down. Okay, but I'm not concerned. Stock picks has been shrinking. Okay, that's bad luck. I've got not many stocks to pick from at the moment. About 23 out of 168, which is not a lot, but some of the ones that are doing it are going up quite nicely. Portfolio positions have also shrunk, and that's a natural thing to happen because it means that you are ready to re-add when the market comes down. Okay, and that's an important part of your portfolio. Okay, so what do? We are preserving capital at the moment. So positions shrink, we put some more cash in the bank, not earning much, but it doesn't matter. We're ready to pounce when we need to be. Prepared for the next upswing. Markets go up more than they go down. Okay, it's important to know. So why do we focus and worry so much from the down periods? The up periods are what we really want to focus on. That's where our faith lies. Okay, faith in the numbers, faith in history, faith in the market, all that sort of stuff. Okay, so what do? Okay, performance history supports what we do. Okay, 18 years of performance history. We follow the system. It's important to follow the system exactly and not say, I won't take this, I will take this one, or I'll pull out of the market for a couple of weeks here because I'm not sure what's going to happen. Wrong thing to do, okay? Don't become disheartened, okay? Keep your strength, keep your mettle, keep your focus. Patience and courage will be rewarded, okay? So, like the picture says, be brave and do that in the face of all odds sometimes, okay? So, market's correct. Why are we surprised and what do we do? If you withdraw during difficult periods after suffering a series of losses, the likelihood is that you won't reap the benefits of the ensuing upswing because every time we have a correction, an upswing occurs. And that's why it happens. Don't just take the bad bits, make sure you get the good bits too, okay? It's important. The extreme fear of COVID was a great example of a new bull market. The greater the fear, the greater the opportunity. So, you really got to think that way. Keep thinking clearly and not responding. Like I said before, there's 2 things I want you to focus on this week: the power of patience and detachment. Detachment from all the bullshit that's around, and it doesn't matter. And all it does is worry you and make you do silly things. So don't worry about that too much. So I'm just going to show you this chart one more time. Market's correct. Why surprise and what do? They correct, but they rally. They correct and rally. They correct, they rally, correct, they rally. All the different sizes, corrections are different sizes, rallies are different sizes. I just take them as they come and respond to the market as it tells me. At the moment, I'm pretty neutral in the market for the most part, apart from a few stocks going up. And here we are. Are we in a correction or not? I don't know. We'll have to wait and see. Okay. So, okay, so what's happening at Stockradar at the moment? Okay, so there's lots more stuff on the site than I do here. Our educational newsletter at the end of each month. Last month it was out, last week. I cover the blog, I read my portfolios, and of course you always get my smiling face on the YouTube videos. Yes, I am a real person and I'm here to help you as much as I can. So that's it for today. I hope you liked a little fireside chat. fairly sort of relaxed as I come back from holidays and found it helpful. It also gives you some perspective from where we're going this year. By joining Stockradar, we will help educate and guide you in understanding the market climate and how best to cope with it all conditions. Not perfection. Don't look for perfection. You're in the wrong place. We're looking for odds. We're looking for the more right than the more wrong type thing, okay? Our objective is to trade trends and momentum swings and nothing else. When they stop, we get out, mainly because we will protect your capital and are never exposed to big drawdowns and are then prepared for the next upswing. There is a price to pay, but it's worth it. We're here to hold your hand. So keep your poise, keep your focus, keep your poise, keep your control, and understand that time is probably your best friend, and that is the power of patience. Remember, it's not about picking the market, it's about making money consistently over time. I'll leave you with that thought. Stay safe, and I'll see you next week.